but I think we can make something out of these. Okay, good afternoon, everyone. So sorry it's coming out this way. No, I was about to start class when energy was interrupted. But I'm just going to go use the gen. It might be so noisy. And let's not forget I'm far away from home. So we just have to make use of what we have. Most important things that we have the class is a success. Okay. So I'm just going to just a moment. Just going to go fix this. Okay, right. Just a moment. I think this will be good to go. Okay, yep. I think that's fine. So I'm just going to put that back. Awesome. So I welcome you all on board. It's another time with Tutor Ayo, the entity tutor. It's so hot right now in the country, and the economy, the weather, everything is just something else. Okay, but we just have to. We are Nigerians. We are strong. Just have to make something out of what we have. Forget about the rest and do our best, and let God have the rest. Now we have. I welcome you all on board, and it's another time with Tutor Ayo. And like I said in our previous class, I apologize for not having the board. It's because of the fact that I'm far away from home. And just have to make use of what we have to get what we need. And I wouldn't want us to stop classes for no reason, because we have a long way to go, and we need to move at a consistent and averagely fast pace. So today, without further ado, we will be talking about the two-column cash book. In our last class, we spoke about the single-column cash book. Today, we'll be commencing with the two-column cash book, discussing what the two-column cash book is and the features and how it's been handled. All right. So with this being said, let's hop straight into it. Now we have, as a business grows, okay, the owner or owners will realize the need to open a bank account where the organization's money can be kept. Why do you need a bank account for your business? It's because you want your money to be kept saved somewhere in the bank. And believe me, before you can even open a bank account for a business, at least you know how much you make, how much the business is making, okay, on a daily basis. So now, to be able to monitor the movement of money to and fro from the bank, there's need for what we call the two-column or double-column cash book. Okay, two-column or double-column cash book is required to know the movement, to monitor the movement to and fro, all right, of your money from your from movement of money to and fro from the bank. Now, two-column or double-column cash book is what we will be talking about today. Now, two-column cash book is therefore a form of cash book. It's a cash book too as well. So it's a form of cash book that used in recording cash and bank transaction in the same book. Cash and bank transaction is being recorded in the same book, unlike the single column cash book that does not acknowledge bank. Both totally acknowledges only cash. But here in the double column cash book or the two column cash book, we have bank and cash. Now, it's been recorded in the same book. The bank transactions are recorded under separate column, while, right, likewise, the cash transaction is what? Recorded in a different column. Now, when we say bank transactions, could it be withdrawing from bank cash or depositing of cash in the bank? All right, we'll get to know about all this as we comment. Now, cash movement to and fro from the bank. A distinguishing feature of the double column cash book is that it shows a glance. All right, it shows at a glance the movement or transfer of cash Okay, the movement or transfer of cash or money from the company's office to the bank, all right, on one side, and withdrawal of cash from the office to the office. Now, what do I say in essence? Like I said, cash deposited, okay, not individual cash deposited. I mean, the organization as a whole, the company as a whole, the cash. When you make so much money, like where I worked before, the five-star restaurant I worked before in Cappadocia, Abuja, uh, we make cash payment. We accept cash payment, all right. In as much as we accept transfers, POS, we see. I think there are days where we do cash payment of over 1.5 million, cash payment of over 800,000. Cash. I think the highest cash payment I've received was about, I think it's about 2 million cash. Yeah, 2 million cash payment. There was a day somebody even brought 1 million naira to pay for reservation. I'm even looking for the bag to compare 1.4 where he packs the 1.4 1 million naira. The bag is never more than this. I think they're about two bundles. Yeah, two bundles thereabouts. But if you see the way this money was piled up together, like the tape used in holding the money together, the tape is almost as strong, right? The strength of this tape can be equivalent to the strength of a plastic, but it's not a plastic. I think it's a kind of plastic. You find them in all these new electronics. One white tape like that you can use to lift everything, and you don't even get to cut them with your hand. You have to use a scissors or a razor or something. Okay. So what am I saying in essence? Whether it's cash payments that you receive, okay, and when you have so much cash, you can't keep them with you in the office. You have to go and deposit them in the bank. So when this cash payment comes in a double column cash book, you have to include it under the bank transaction. All right. If it's the cash payment bank transaction that you need to go and deposit in the bank, or you have to do cash withdrawal. Maybe in the office you need to get something, so you need to go to the bank to use a check to withdraw cash. Also, you need to record this too. All right. Now, let's go straight into it. Now we have the movements are treated in special way in the two column cash book as following. When cash is withdrawn from the bank to the office, you debit the cash column and credit the what? Bank column. Meaning that cash is received and bank is given out. That's why you debit the cash column, cash is receiving now, then you debit bank, the bank column, because bank is the one giving out the money. All right, bank is the one giving out the money, while cash is the one receiving it. So that's why you debit the cash and credit the bank column. Okay. Now this entry will reduce the cash in the bank. All right. Don't forget it's still the same company. Now when you debit bank now, it's still your account. So don't forget it's still your bank account. The cash in your bank will reduce. All right, and the cash, okay, you are crediting will increase. Now it says that this entry will reduce the cash in the bank and increase cash in the office. Okay, that is for you debiting the cash and crediting the bank. Now when cash is removed from the office and paid into the bank, it's the other way around. You debit bank because bank is collecting the cash, and you credit cash column. Are we together? So in the case of you now taking cash from the office to the bank, cash will reduce in the office and cash will increase in the bank. So now bank is being debited as bank is the one receiving the cash, and office will be credited as this office is giving out the cash. So we have to understand. So and there's something called contra entry. Okay, there's something called contra entry. When we say contra entry, what are we talking about? Now, when any of the above entries, okay, occurred, whether it's debiting of the bank or crediting of the cash, or debiting of the cash or credit of the bank, whenever any of the above entries occur, it will lead to what we call contra entry, and it is represented by letter C, okay, in the folio column. Now, I think we are still going to, it's not really necessary, but it's not a must, but I think it's necessary. And when we are done with the theoretical part of the course, we are going to take out time to draw tables and do some posting. So in 2-column Cashbook, there's something called contra entry. All right, contra entry is 1 column you give for the space of transactions like debit bank, you credit cash, or you credit cash, you debit bank. Any of this entry, it will occur under your contra entry. Okay, if it was a case of only debiting cash, only debiting bank, no need. If it was a case of only debiting cash, no need. All right, but if it's a case of debiting cash and crediting bank, these two, then it has to occur in the what we call the contra entry has to occur in the folio. All right, folio column is where you put your contra entry transactions. Now, a contra entry is any transaction that has been recorded twice in an account. All right, look at what it says here. It says it's an account. A contra entry is an account, any transaction, that has been recorded twice in an account through a debit and a credit entry in the same account. Okay, like I said, through a debit or credit entry in the same account. All right, debit cash, credit bank, same account. So that will occur in the folio column as contra entry. All right, it means that contra entry cannot be found in any of the journal and cash book, but it can be found only, all right, exclusively in the 2-column cash book, the 3-column cash book, and petty cash book. Are we together? Now, contra entry transactions are posted, all right, they are posted, they are not posted, they are not posted to the ledger. All right, they are not posted to the ledger, unlike the other one we've been talking about. So the contra entries, they are not posted to the ledger. So as you can see here, we have dates on the table we have here. Now we have the T format, the debit side on the right, and my left hand side to use your right, and on my right hand side, your right hand side to use your left. All right, so we have 2-column cash book. We have the date from the debit side. Now we have date, we have particulars, we have folio, we have cash and bank. Okay, then we have on the credit side, we have dates, particulars, folio, cash and bank. I think this will be better explained when we are doing the posting. As soon as we're done with the theoretical part of this, we do the posting as well. Okay, so now we have that start. Now we have something called the 3-column cash book. Okay, we are done talking about the 2-column cash book, and we talk about now the 3-column cash book. Now the 3-column cash book is one of the subsidiary books of accounting, okay, used to record cash and bank transaction in addition to discount received and discounts allowed. Are we together? The 3-column cash book is one of the subsidiary books of accounts, and this subsidiary book is used to what? Record cash and bank transaction in addition. Single column cash book does only cash. Double is included with bank and cash, which has the folio, the contra entry. Are we together? And 3-column cash book has to do with the bank. Are we together? The cash and discount received. All right, sales transaction that involves discount received or discount allowed are found in the 3-column cash book. Please note all these features, and the types of this type of cash book combine discount. All right, discount column on both debit and credit side. Both sides we have the discount column. All right, to the cash and the bank column. All right, both bank and cash to the both side, and both credit and both discount column on both sides. Now, each of this cash book has three, right? Each of this cash book has three column for cash, bank, and discount. Like I said, bank, cash, and discount on each of the sides. Now, the discount allowed column is on the debit side, while the discount received column is on the credit side. The discount allowed, okay, discount allowed, meaning that it's coming in, you allowed it. It's like on you, are allowed to give the discount. But discount received is what was given to you. You are credited. So on the credit side. But discount that you are allowed, like a gbese. Let me use that word. Those of us that don't understand about like a debt. The way I'm giving discount now is either you are using it as an incentive to encourage payment or patronize or patronage. So it's like a gbese. So you are being debited. But when you are receiving now, it's a goody gift to encourage you. So it's on credit side. Alright? So now we have it is cash discount that is recorded in discount column and not straight discount. Okay, please note that you only get to record cash discount. Okay, that is recorded in discount column, not straight discount. Now, cash discount is said to be an inducement, something attractive to draw attention, given to debtors, all right, for paying their debtors, creditors into bracket, for paying their debt on time. You are even 20,000 now. Can you pay 15,000 now? I'll forget about the rest. Oh, wow. And take. That's it. Okay. This cash discount is an inducement. This inducement is given to debtors or creditors, customers, for paying their debt on time or promptly within the specific time frame of period. Okay. It means that a credit customer can enjoy both the trade discount and the cash discount. Right? Don't forget, cash is about payment, trade is about buying and selling. All right. Now, provided the term for the discount are specified by the seller are met. So note that the credit customer can enjoy both trade discount and cash discount. All depends on what the seller is saying. Now, the discount column is in a 3-column cash book are part of the double entry system. Okay, the discount column in the 3-column cash book are part of the double entry system. Okay, now the total of the discount received column will be transferred to the credit side of discount received amount in the ledger. Speaking of the ledger now, the total on the credit, the total of the discount received column will be transferred where? To the credit side of discount received account in the ledger. Okay, so we have that as that. Now also we have what is called the petit colon cash book. Okay, the petit colon cash book. And when we say petit colon cash book, what are we talking about? Petty cash payments are small payments, like the name you have, like the name petty. All right, petty cash payments are small payments given out for small, all right, expenses that occurs almost on daily basis in an organization. All right, these are payments that occurs in small expenses in all organizations, like transportation, like fuel, like feeding, the likes. You want to buy biro, you want to buy soap, you want to buy water, something. All right, this arrangement is put in place to relieve the main cashier from attending to numerous payments, big and small. All right, this is basically to make work easy for the cashier a little bit. Now, the cash provided for the petty cashier is called petty cash. Now we're talking about the cashier or the accountant in charge of the petty cash book. All right, and petty cash are given to the cashier just to relieve the cashier of small payments. Okay. Now, while the book used to record the petty cash transaction is called the petty cash book. Now, Cash provided to the petty cashier, not the main cashier. There's a petty cashier. This cash provided to this petty cashier is called petty cash. The book used to record the petty cash transaction is called petty cash book. Now note, petty cash and impress system. The petty cash impress system operates when the main cashier gives the petty cash. Alright, when the main cashier now give the petty cashier enough money that is sufficient to cover petty expenses for a given period of time, a week or a month. Now, at the end of the stated period, the petty cashier gives the detail of how the money was used and gets reimbursement or replenishment equal to the amount already spent from the main cashier. Now, please note, impress system and petty cash book or petty cash works hand in hand. All right, impress system, petty cash works hand in hand. Basically, they are interchangeably used. All right, and basically it's all about getting small amount of money to attend to small things in the office. Okay, now we have the system operates when the main cashier gives the petty cashier enough money that is sufficient to cover petty expenses. Okay, now as we said, at the end of the month or the week, the petty cashier will make analysis for how the money is being used and get reimbursed or given the equivalent amount that she was given, or the cashier was given, petty cashier was given from the onset. So we have the double entry system. Now, when we say double entry system, it's a system that signifies a way of recording all transactions twice. Recording all transactions twice in the books of account. All right. The double entry system signifies a way of recording all transactions twice in the books of accounting. Okay. It means that transaction will appear twice in accounting book, fulfilling the law of double entry system. The double entry principle states that you must have heard me say these things. For every debit entry for a transaction, there must be a corresponding credit entry for the same transaction. And for every credit entry, there must also be a corresponding debit entry for the same transaction. And that's how it works. Basically, that's how it works. So we have that as that. Okay, I think we need to call it off for today in the next few minutes. Okay, my tools are running pretty low, and okay, now we need to understand that for every debit entry there must be a corresponding credit entry, and for every credit entry there must be a corresponding debit entry. That is the principle of double entry system. Now, we also have what is called the ledger. Now that reminds me, give out an assignment. Just one person has submitted the assignment. What seems to be the problem? Please let's not. I don't want us to begin to become lackadaisical, or I don't want us to begin to become complacent. Okay, please. As soon as assignments are given out, let's respond to them with alacrity. All right, and let's submit them with immediate effect as soon as we can. Okay, so the ledger, is the principal book of accounts. The principal book of account where the double entry principle is completed. That means that some transactions that will be on the credit side on an account, it will have refer on the debit side on the ledger. Okay, so you say there that the principal book of accounts where the double entry principle is completed. The ledger contains various accounts which are part of the double entry system. Okay, that's that. And we have each account in the ledger is divided into two parts, namely the debit and the credit side. Okay, the debit side is always on the left, while the credit side is always on the right. We all know this by now, I believe. So we have that as that, and very quickly. Okay, in our next class, we'll be talking about the classification. Okay, classification of ledger. Please let's all bear with us this week. I'm very sure that by next week everything will be restored properly, and we'll have our classes just the way we used to have them. And let's not forget to keep our notes up to date and send them to the appropriate quarters. Thank you very much, everyone. I look forward to seeing you all in subsequent tutorials. Do have a wonderful evening. Bye.